You know what? Why should I pay some financial advisor a fee to manage the money when I can do it myself? Well, let's talk about that in the next Wealth and Whiskey video. So welcome to Wealth and Whiskey. I'm Roger Kiger. I've been a financial planner for about 30 years, helping people build wealth and protect their legacies. So Wealth and Whiskey is really about things that you want to talk about and maybe some things that other advisors don't want to talk about, because there's a lot of things that are aged and quite unfiltered. So this week, let's talk about fees from a registered investment advisor firm and why it sometimes makes sense to pay somebody a 1% fee. And I'm using 1% as an industry average, right? Sometimes it's less, sometimes it's more. It depends on the firm, depends on the services. There's a lot of variables around that. Most of the things you see me talk about will be around industry averages. So why should you pay a fee? Well, you can go do it yourself, right? Well, let's talk about a few things that maybe you should get for the fee that you pay the firm. So first of all, I think there's some misunderstandings about diversification and what that really is. A few examples. I've seen people buy a Vanguard fund or buy a Fidelity fund, and they have one of each of those in their investment account when they both own the same positions. That's not diversification, right? True diversification is large companies, small companies, international companies, and each of those categories broken into further subcategories, and when you should change those allocations, right? That's really more diversification, and it makes a whole lot more sense for an advisor to do that strategically based on your needs, market conditions, your risk tolerance. Maybe you don't even want money in the stock market. Maybe you're okay with a 4 or 5% return in bonds and CDs, and you have no risk in the market at all. It's another form of diversification. So I think diversification is one thing that most individuals don't do well on their own. Most people feel like you can buy the S&P 500 and that's okay. And to be fair, that's not a bad way to do it. You just might accept a little more volatility and a little more risk than the diversification will give you, and sometimes a little less of a return. But we can go way deep into that piece of it maybe in another video. But another reason to talk to an advisor is for the coordination of all of your financial needs, right? How does your investment account or your IRA or your 401k work together with your taxes, work together with your estate plan or your insurance? How do you use those to plan Roth conversions, or how do you know whether you should put money in a Roth or a traditional? There's a lot of coordination that really should happen to really utilize all the tax brackets, to really make sure you're earning the best return. You're not over-insuring yourself. And do the beneficiaries in your will match the beneficiaries on your IRA, or should they? So I think that's the second thing that I think a lot of people miss about hiring a financial planner or somebody to manage the assets and help do some of the planning. So, which brings me to the third thing. I really think a financial planner can help you not just deal with the issues, but plan going forward. What's your retirement going to look like? How should you invest? What returns should you expect to meet your retirement goal when you want to retire? It's hard to do that. There are plenty of software packages and internet sites that can do a financial plan for you or a retirement plan. But man, there are so many inputs. There's so much information that needs to go into that I think a lot of clients don't understand that until they sit down with an advisor and see what all the inputs are, so that you don't get frankly, a garbage in and garbage out kind of result. because there's a lot of things that questions people don't know to ask. So, and then I think the last thing, frankly, is an advisor or an RIA firm. Yeah, you're paying 1%, but you should get better investments. Institutional firms have access to investments that individuals just can't get because there are investing minimums that the firms will meet on their own that individual clients just can't do, right? So those types of things just by themselves should be enough to generate more in returns than you're paying in the fee. So people get caught up and go, oh, I don't want to pay the fee. Well, if that advice from paying that fee saves you more in taxes than you pay in the fee, probably worth it. If that advice generates more in returns than you pay in the fee, it's probably worth it. If that advice helps you avoid a mistake that you might have avoided otherwise and you have to pay a fee, it's definitely worth it. So, and one last thing that I think we get asked a lot is a lot of folks say, I don't want to move my money to a financial advisor because I'll just leave it in my 401k because it's free. Well, in 401ks, again, they're limited as to the number of positions or holdings or investments they can have because they have a lot stricter compliance regulations on them. So by keeping your money in your 401k, you are correct. It's free-ish. It's free. But you just don't have access to all the things that you really need to invest in long term. And the other challenge with leaving money in a 401k is the fact that if you get some advice on how to diversify or how to coordinate some of these things, now you have to figure out how to go do all that correctly. And I can name on one hand, just in the last few years, some clients that we've said, go do this in your 401k, and they've purchased the wrong investment, or they've done something incorrectly because they didn't know how to do it exactly, and it's cost a lot of money in returns because somebody's not looking at it all the time. So with all that being said, I think if you find the right advisor that knows how to deal with the issues that or the challenges that you need addressed, that's the right person. If you find somebody that can help with all the things we talked about, that's really beneficial for you. With all that being said, every advisor needs to be held accountable, right? So what are the returns and why are those better than what you could have done on your own? What is your measure of success? And does that get you where you want to be? I think it's much easier if you have somebody to ask those questions to, right? Ask those questions to somebody that's been in the business, knows what to expect, has all the tools and resources to answer your questions without always just relying on the internet. The internet's a great thing. We use it, everybody uses it. With AI, it's getting a little trickier, but if you have somebody you trust and you know you're getting the right advice, I think that's much more beneficial. And sometimes the fee is just a rounding error, frankly, which is what it should be. Okay? So all this stuff is a lot of work. It all takes time. Hand it off to somebody if that's helpful. So all your questions are okay, but if you'd like to start your financial journey with us, please download the Legacy Blueprint in the link below. And like and subscribe to our channel because we'd love to see you again on the next video, and we look forward to seeing you again soon. I'm Roger Kiger, and we'll talk again. Cheers.